This is Andre Banks coming today from Banks Credit Chat discussing credit and cars in 2023. And just like we had a whirlwind for the pandemic and everyone was buying cars, pushing the prices up to astronomical numbers we have never seen before, well, the same reverse is going to happen now coming down. Uh, Before the new rule the old rule that was just try to get as many people in the car as you can, is now backfiring. And what was once easy to do in terms of people overpaying for the cars are now becoming much more harder with interest rates increasing so dramatically. So, I used to say the old adage of ass and seats used to be the model for most people selling a car. Low credit scores, you can get someone in. And commercials like Drive Time still allows that to be possible, but at such a pay rate it's just ridiculous. And during the pandemic time, we did see cars, and they became assets instead of the utility they are. They took, for the most part, outside of the luxury cars are utilities. You need it from place to go from A to B, get you back and forth to work, and it's not really an asset in the sense unless it's a collectible or a car that's pristine or has its a little more of the luxury vehicles. And when I mean luxury, I'm talking about these really classic automobiles that retain its value. For the most part, cars, once you drive them off the lot, they lose value. But how does this reflect in credit and credit going forward with the banks and stuff like that? What's now changing is that even individuals who had high credit scores finding themselves now making payments that they couldn't even do before or not even qualifying. So the old rules that were once applicable, this is back when maybe 2008 or 2009, where they actually looked at bank statements, you're looking at your pay stubs, really making sure that you can qualify to pay for the car going forward, and that you're actually approved under a rate that they can guarantee that, or at least put in the higher probability they can retain their money. If they give you the loan, they're doing that again. So no longer are they just doing this blanket thing where they can get you inside a car and figure out how the payment is going to be made. Because since they overfinanced these vehicles and people were paying $10,000, $20,000, we've heard all the stories, $10,000 to $20,000 over what the MSRP book value for. Now it's come back to backfire, and which was going to be a logical sense anyway, because nothing can continue going up in this ridiculously straight line. Again, as I specified before, cars are utilities, and they are not really assets as we've been taking them to believe. I've heard, especially during the pandemic, these ridiculous videos. Hey, my car's an asset. I got a deal here. I can retain my car and get it at a low interest rate. Well, interest rates has increased dramatically, and we're coming back to normal economic times where things have to make sense. And during the pandemic and before this, a little bit before the time, things weren't making sense. Cars were it was just absurd. I've had family conversations with people trying to make an argument with me. This is a couple of years ago. I got this car at an asset. I can trade it in for higher and get more money for it, which defies the typical rules that we play by when it comes to assets and liabilities, especially with vehicles, because they, again, I want to stress, they are utilities. So do not be surprised when you're going to get a bank loan, and even if you have a very high credit score, like 700, 750, and you find yourself in these interest rates where it makes it much more difficult to make that payment. And they're double checking, triple checking, because the banks have had to take back a lot of these repossessions, and they essentially own the loans for these things. People also found themselves in negative equity, meaning that they got a car 2 years on, and the typical thing, I could just flip it to get a new car with a new lease. Now they have all this back equity, and unless you're willing to pay down a large amount, they can't do anything to help you get into a new car. You're going to find that out. Now, how does that reflect in terms of prices? Well, car prices are going to be a slow grind down. And if they increase slightly right now, depending on the time that you're watching this video, it's usually because of this. It's tax time, and car dealerships and people are expecting that they're going to get more of a refund, so which then continues this vicious cycle of people buying cars overpricing them. Well, they've been slowly going down, and a lot more are going to be on their books, and they're going to be on a rude awakening once you go inside there and people are not getting the refunds that they typically got, especially in the last couple of years, which was out of the ordinary. So, credit in cars in 2023, you need to be very careful what you're doing. If you're going to look to buy a car, and it's extremely mandatory, then don't be surprised that you might have to lower your standards, come with pay stubs, make a large down payment, and the interest rates are going to be a lot higher than you thought it's going to be. And this is people with even good credit scores. If you can hold off and wait, that would be the best thing for you to do. But if you find yourself in a situation where you have to have a car right now, don't be surprised to have all your ducks in a row. Don't be surprised to have all your ducks in a row where they're making it a lot more stringent. And really, when I mean stringent, it's just they're really functioning by rules that they should have had from before. Pay stubs, make sure you can be able, your debt to income ratio is a certain way. Make sure you can be able to pay the payment, and you have to make a large down payment. This is what the new environment we come ourselves into, and it's only because of just once you push something into the far reaches of the opposite spectrum, where everyone's getting luxury cars, everyone's getting cars by paying over these prices, eventually comes back down to getting down to the median when things go back to normal rates. Car numbers still have, from a lot of the people who are real experts in this industry, have not reached back to 2019, or they're getting close to that. But you might see a price increase because they're trying to do a marketing gimmick, and no one wants to lose money. So car dealerships and places at that point, they're going to try to keep those prices high as they possibly can, because again, they don't want to lose money. But they're finding themselves on the books. A lot more repossessions are coming, and the market continuing to cool and slowly coming into some long of a recession. So much talk about that, but once you're on one side of the aisle and you're pushing a narrative, don't be surprised if it takes a lot longer than you anticipate. So recession, we're just starting to see some of these little hiccups now, but it hasn't really been full blown. Hold off if you can. That's the biggest thing I said, because that's what I've been finding out doing the research. Hold on as much as you can if you need to buy a car. If you have to buy one, just as I mentioned before, expect normalcy, meaning that when you go inside there, they're going to ask for pay stubs. Make sure your credit's in a good standing, and you have the ability to make the payments. And it's not more than just you have steady income, steady job. That's what the banks are looking for, especially going forward. This video has been a value to you. Please subscribe, leave some comments. Until my next video for Banks Credit Chat, I'm out.